Hi, this is Mani from bse to nsc.com. In this video, we're going to look at stochastic oscillator, which is a technical indicator, and how to frame your trading strategies based on it. And before I proceed further, subscribe to our YouTube channel to stay in touch. Join us and get a free training on futures and options. So getting back to stochastic oscillator, it is very similar to RSI, and if you want to know about RSI, which is nothing but relative strength index, watch our video on RSI. I'm going to put a link right here which will lead you to our video about RSI. So both RSI and stochastic oscillators are very good indicators of strength and weakness in the stock prices, and it will give you in a scale of 0 to 100. So stochastic near 80 indicates overbought levels, as mentioned here, and a stochastic near 20 means that it's close to being the oversold levels. Now, one thing that you need to note here is that sometimes it may continue to stay at 80 and keep going up on a real extremely bull run. On an extremely bearish kind of a situation, it can stay at 20 for longer periods of time, and it can keep going down. Okay, so and again, how should you use it? I'll show you intraday chart on Bank Nifty and give you an example of how you should trade based on it. The next point here is that on an intraday, it may keep fluctuating between 20 and 80 multiple times through the day, and the way you have to look at is compare the price movement as well as the stochastic movement or the RSI movement at various points of time. So when stochastic hits 80, if new intraday highs are not made, or if new intraday highs are made, or new highs are made on the chart, on the daily chart, it means it indicates a strong bull run, and any correction coming in later should be used as a buying opportunity. So sometimes when the stochastic is going to hit 80, new highs will not be made. In fact, markets may actually be trending lower. So if it looks like the chart wherein it's trending lower even when it's hitting 80, it indicates an extremely weak market, and it's merely a pullback or range bound market, and you should probably use it as an opportunity to short. So there are two kinds. So similarly, the vice versa goes. When the stochastic is hitting 20, if new lows are made, it indicates a strong bearish phase. And when the stochastic is hitting 20, if it's not creating new lows, then it means that it's just a correction, and buying could actually come in. So I'll just give you an example because it may be a little confusing here. I'll just give you an example by taking you to an intraday chart in Bank Nifty, and we'll discuss about that there. And so this is the chart. I've just taken a snapshot and I've put it in MS Paint here. And this chart you can get it on bse to nsc.com. In the top tab we have for charts for Nifty and Bank Nifty. You can see on the top left here that this chart is for Bank Nifty, and this is an intraday chart. You can see May 30th, and this is the entire day's chart. You can see the start at 10 a.m. around 10 a.m. here, and then the close around 3:30 p.m. and the indicator that I've shown here at the bottom is slow stochastic. You can see two lines, the blue line and the green line, and on the right hand side you can see that it is on a scale between 0 to 100. So 80 means overbought situation and 20 means oversold situation, right? So let's just discuss and go through what the points that we've seen and how you will apply it in the markets and how you'll look to trade based on the opportunities, right? So here the market opens and then starts with a strong negative outlook. And typically as a smart trader, I recommend people not to trade until 10 a.m. or until in the first 1 hour, because the first 1 hour will be like pretty extreme volatility and you'll not be able to predict the trend. So that the day starts weak on a weaker note, or on a bearish phase wherein the stochastic is near 20 levels, and the market crashes, bank nifty crashes, and then slowly markets are recovering here, as you can see, and it's hitting 80, as you can see, at around noon or just before noon. You can see that it's gotten close to 80 here. Let me just mark a straight line. I'll get my line sizes here. Okay, so you can see here that around this point, when it's hitting 80, it has not created fresh highs, meaning it has not recovered from the losses here, and it just means that it's a really the markets are trending lower wherein the sellers are in control, and this is merely just a pullback. This phase is just merely a pullback, and from 80 it's again starting to dip below, and the blue line goes below the green line, you can see here, and I'll just mark an indicator here. I'll just mark a red circle so that you can understand that this is an opportunity to go short here, right? Let me take out that black line as well. So this is an opportunity to go short because it has reached 80, and here it fails to go down. Actually, this is actually like touching and then again recovering back, and then it goes down, and it goes down conveniently here, so you can even enter into a fresh long here, correct, fresh short position here. I'll again draw a circle. Why I'm saying you should enter into a short position here is because you watch the markets for the first few hours and you've seen how the markets are behaving. It opened at 15,100 and it drops by 200 points, and then it's slowly recovering and coming to 80. On some days you can like see that if markets had recovered like this, had recovered and recovered this phase when it's hitting 80, then you can see that buyers are coming back in, but that's not the case. It has still not gone above this resistance line. The intraday highs are not cleared. Not even 60% has been retraced, and the stochastic has hit 80 and then it's falling down. So this is an exceedingly good short opportunity here, and it drops lower and lower and lower, and a smart trader can actually like book profits here when it's like when the values are again coming back up here, right? So as a smart trader you can like book profits here, and again you can see that it's trying to go up. The stochastic is slowly going up, and here you can see that once again it's going down below. And I forgot to tell that this is the 5-minute chart, so each candlestick represents 5 minutes. So here again it goes down. Here again you have an exceedingly good short opportunity, and you can see that markets are actually trending lower entire day here, and again one more short opportunity here. Today it was a day wherein like sellers were mostly in control, and you can see it looking at the technical indicator also, right? So here you have a short opportunity also. So, and again you can see that it hit 80 before noon, and after that it has never come back to 80, and it's come back and it's actually trending lower. So while stochastic is trying to recover, it's still not made new highs. It's not even cleared the highs that were made around 11 a.m. and it's again trending lower, so which again indicates a extremely weak market. So as a smart trader, you can again look to go short here and then here when it's trying to again dip. So these are just mere pullbacks. Even though stochastic is going above 80, you see that markets are not creating fresh highs, or you do not see a strong bullish movement in terms of the prices. It indicates a extremely weak market. um, I don't have other charts for intradays, but on other days wherein the markets are extremely bullish, when stochastic is hitting 80, it will constantly keep creating fresh highs, and you will see an entirely different kind of a chart. So you should be able to look at the charts and uh, be able to judge that, and based on that you should trade and look to take opportunities that is given. So any questions or any queries on this, you can post on this video. You can also log on to bse2nse.com and post your queries there. Read my book on art of stock investing in PDF format. It's now free of cost. You can also get it at bse2nse.com. Subscribe to our YouTube channel, and we also provide free training on futures and options, so you may want to check out our offer at bse2nse.com. That's it for now. Thank you. Bye bye.